Hello and welcome to my favorite time of the month. This is the real estate market report, and what we are looking at here specifically in Southwest Florida. And let me tell you, the details, the data is a bit juicy, so stay tuned because this is going to be awesome. So let's jump right into it. Every single month we talk about what the real estate stats are, and that's year over year, because that gives us a really good idea for where we are, because we are a bit of a seasonal market. Now, our number one thing that we're looking at here is the closed sales, and this is again for Lee and Collier counties year over year. And in Collier County for 2023 in January, these are our January stats, we have 286 closed properties, and that's down 36% over last year. And then in Lee County, we have 868. That's down 21% over 2022. Now, let's talk about why that's important, because we know COVID sort of changed everything in terms of what was normal, because there was just no normal post-COVID. And 2021 was the banner year of real estate sales. 2022 was a bit slower than 2021. And then you can see this year we're actually between 20 and 30+% less closings in January than we had in 2022. So again, that slowdown is continuing. Now, I had somebody ask me after my monthly video last time what it meant, how does it look historically before COVID, because we know COVID messed a lot of things up. And so I went back in time, and in 2019, well, actually 2020, January 2020, right before COVID came, we had 1,400 closed sales in all of Southwest Florida. Fast forward to 2023 and we had 1,250. So we are slower than the normal times that we used to have before, but again, properties are still selling. Now, when it comes to pricing, we're at $750,000 for the median price in Collier County. That is up only 4% over 2022. And then in Lee County, we're at $420,000, and that's up a measly 2%. Now, that is drastically different from what we saw all last year. All last year, we were seeing 30+% appreciation year over year, and now we only have 4% in Collier and 2% in Lee. That's a really big deal. Now, here's what I'm going to tell you that I can predict, and I'm quite confident in this prediction, that over the next several months, we're going to see that number, the annual appreciation, actually go to negative. We're going to see that in a negative number for the first time in many, many years. And here's why. May of last year was the height of the market from a pricing perspective. At that time, Collier County was at $875,000 was the median price of a single family home, and Lee County was at $470,000. And so you can see with the numbers of where we are right now that if that trend continues, which I believe it should, that those numbers will become negative over the next few months as we lead into May numbers. And so that number, by the way, the median price has stabilized quite a bit. It's not dropping drastically or anything crazy, so don't think that that's happening just yet. Okay, now as we get on to days on market, that's the other big part of the story. In Collier County, we're looking at 43 days on market. That's a 72% increase versus last year. And in Lee County, we're at 34, which is a 100% increase. So we basically doubled the amount of days on market compared to this time last year. Things are taking longer to sell. So less are selling, things are taking longer to sell. You can see that happening. New listings, 678 in Collier County. That's only up 4%, and 1,717 in Lee County, and that is up 9% year over year. So a few more listings coming on the market, which this is all really shaping up to be really good news for buyers. Now, the pending inventory is at 767 in Collier County. That's down 27% year over year. And then we have 1,889 that are pending, and that's down 29%. So you see, when we have a significant number of reduction in pendings, that our future closings are going to be affected by that as well. Now, month supply, what that means is we have 4.5 months of supply in Collier County. That's up 275%. 275, 275%, crazy. And then in Lee County, that's at 3.2 months, that's up 220%. So both of those numbers are up over 200%. In Collier County, we have moved so far in the direction of a buyer's market at this point. We're there. Basically 4 months is what we consider equilibrium, and we're over 4 months worth of inventory, so the buyers are starting to hold the cards, and they're happy about that. It has been a long time since the buyers have had a whole lot of say in what goes on in a real estate transaction, a whole lot of power in the negotiation. So it's a good thing for buyers from that perspective. And then we look at total volume, dollar volume on the market. We're at $488 million in Collier County and $504 million. Both of those are about down 20%. Collier's down 18% and Lee is down 20%. And again, that's taking the price and number of units into account here and saying that total dollar volume that's getting pumped into the market is down roughly 20%. So that has an effect on really everybody. So what's driving these numbers? And the obvious one is that we're dealing with interest rates that are still 6-7% somewhere in there, and depending on credit score, etc. And so that's driving the slowdown. Even though we have a significant amount of cash deals that are still happening, the interest rates are affecting a certain portion of the market in a fairly large way, and that affects a negotiation for all parties, even if it is a cash buyer, if there's less people who want to get financing on their particular properties. So from a buyer's perspective, we're seeing things we haven't seen in a very long time that you can now negotiate. Sellers are willing to also pay towards closing costs in many instances. And so these are really good signs for the buyer. Prices have retraced some. Now, the question that I get very often is this a bubble? Is the market going to crash? Here's the deal. People have a significant amount of equity in their properties. And so therefore, even when prices come down 14% in Collier County or 11% in Lee County, there's still so much equity to cover that no sellers are, well, I can't say no, but most sellers are not putting themselves in a position where they can't afford their mortgage, or if they can't, they have enough equity that they can still sell the property. The other statistic that I think is really important with this narrative is that if we look at the entire United States, 41% of homeowners have no mortgage on their property. That stabilizes the market in a significant way to where you cannot force those people to sell. You can't do it. In the 2008, 2009 timeframe where, market was actually crashing, people didn't have that equity. And so they were forced out of their homes. They were forced to sell. And so they had to get out. Properties went short sale, properties went foreclosure, and we're just not in that kind of a market. And so as we see this, I expect that days on market will continue to increase. I expect to not see much appreciation in the market going, for the foreseeable future until the Fed does something with interest rates to then help and trickle down to mortgage interest rates. So let me know what your thoughts are. How is this market impacting you? Please comment below, and if you could do me a favor and like the video and subscribe to the channel, that really helps the YouTube algorithm and inspires me to make more videos like this for you. Have an amazing day and hope to talk soon.